Well, I'll edit the entry in the thing. Sorry. Sorry, guys. All right. Copy. Edit. All right. I adjusted the entry on this trade. It should move fast, yes. Entry's the same? Okay, then leave it as is then. I thought I had moved it by accident, but it's fine. I'm using Trade Locker. No, I haven't said enter yet, no. I won't make a call to enter until around 10 minutes before 2. Blurry, the picture? Well, you guys have the inputs there. Oh, let me add TP2 in there on that one. I'm adding TP2 to the signal. Done. Let's take a look at the heat map. Sorry, guys. I'm using Trade Locker. No, I use the exact same. Most of my trades I use I do as market execution. Like I map it out here. I used to do all this input stuff, but now I don't. I just literally I watch the market, I wait for the entry, and I always have my finger on the trigger, and I'll hit buy or sell. But for you guys, for new traders, I suggest doing this so you can get accustomed to it. I'm gonna go out to the 1 hour, see where the RSI is. RSI is looking like it's gonna go down. Looking like it's gonna go downtown, Julie Brown. Let me make this thing a little bit bigger so we can see it on the 1 hour. To be a 1 to 6 risk to reward. Yeah, it'll be a sell stop if I see the market diving. If the news is negative at 2 and I see the market diving, it will be a sell stop. We might do a market execution buy. We might. We don't know whether we're buying or selling yet. My bias is sell, but we're waiting. So it's 1:40, about 20 minutes till the news. Let's see here. It's Wednesday. So, industrial production. Rates 9.3. Crude oil inventory is negative 6.0. So this is what we're rating on here. So if you don't know what FOMC is, this is what it is. I am on a, no, hold on, let me see. Let me go back. Yeah, I'm on the 1 minute. You can always tell by whichever one is blue here at the top. Oh, man. Yeah, Gab's right. 0.01 in a $500 account. You could do 0.02, anywhere between 0.01 and 0.03. It's all based on your risk tolerance and yeah, and how much money you have in your account. I'm gonna put a line and an alert here at about 10 minutes before news. So this is 2 p.m. Okay, this is 1:50. I'm just gonna add an alert because I'm watching the news as well. I want to know when 1:50 hits. Yeah, yeah, there still is a possibility that it will go up. Yes, and if it does, what we'll do is market execution. Give me 1 second, guys. I gotta go to the restroom. Be right back.
Hi, everyone. Mark Bar.
I think one of the reasons we're so enthusiastic about the Medicare drug negotiation is that it will contribute to deficit reduction, $160 billion over 10 years. Right, obviously, the Inflation Reduction Act was the tax provisions are also incredibly important to the Inflation Reduction Act. So, but we think it is important to remember that there are key deficit reduction items part of this, and that they have very bipartisan support in the country, if not in the Congress.
Okay, I'm going to go to the back, so there's just a lot of interest. Go ahead, sir. Yeah,
Thank you, Corinne. So I have a question on the economic climate agenda of the president. We know at Arizona right now, TSMC is having trouble with the local labor union, which petitioning Congress to block visa for Taiwanese engineers. In Michigan, locals are protesting on the Chinese electronic vehicle battery factory concerning China's growing influence in the region. Those outcries worries the White House that it might hinder President Biden's economic and climate agenda. And is the administration actively engaging to resolve these disputes?
Well, if I understood the question correctly, we're actively trying to reshore our supply chains. We think we're overly dependent. The solar issue was brought up earlier, but certainly in the in electric vehicles space, critical minerals, the processing of critical minerals, we want to see those supply chains reshored or friendshored, as we like to say. We've seen $70 billion of investment in battery manufacturing in the United States. That's a good news story. But we're actively working to ensure that we have secure supply chains for these new clean technology products.
Working with the unions and the local people to addressing their concerns.
We work with unions every day, day in and day out, and I think the president has made no bones about the fact that he believes that the middle class built the American economy and unions built the middle class, and that he wants to see as many of the jobs created here be union jobs, and certainly that people have the right to organize and fair ability to bargain for their wages.
We're bumping up into the president's time. Go ahead, Paul. Phil, sorry.
Okay. Mr. Podesta, I wanted to return to the issue of public-private partnerships. During the Obama administration, of course, then Vice President Biden oversaw a lot of the stimulus spending, but didn't foresee the $528 million loss that was Solyndra. As president, more recently, he heralded the electric bus manufacturer, Proterra, but it went out of business last week. So I'm wondering if you can speak to some of the safeguards and steps that you've taken to steward this public taxpayer money and ensure that there won't be another Solyndra.
Yeah, I'll just be very, very quick. From day one, I asked that the inspectors general convene, and we've done that under the leadership of the Department of Interior Inspector General, to ensure that each of the grant
so what we're going to do
at had the highest level
2
of
we're going to see some candles start between 2 and 2:05 to 10. We're going to see some candles start moving fast, rapidly.
When it's out of the bar,
whichever direction those candles are moving in, that's the way we're going to go. Okay, so if we see a green bullish candle just going fast on the 1 minute, we're going to go for the longs. If we see the opposite direction, we're going to go for the shorts. And it'll be a market execution. Or if you want to play it safe, you can input the signal that I gave you and wait for a price to break below this area right here. Go look at the 1 hour. 1 hour really doesn't tell us much here. Kind of flat, could go in any direction. That's how you know we're in consolidation and people are waiting on the 2 p.m. news. So yeah, go back down to your 1 minute and we wait. All based on your risk tolerance. So like if you're risking if you have a $100 account and you're risking 10%, close out at 10%. See, we have this reversal candle here. I believe that's called like reverse hammerhead or whatever. But let's see what happens between here and here. And let's see which way this thing's going to go. Between 1:30 and 2 p.m. I mean, 150. Sorry, 150 and 2 p.m. Yeah, but I like market execution because it's so much easier to get in and out of trades, and especially when you're using a 1 minute chart, you could spot reversals very easy. Give me 1 second, guys. I got a call. Hey, what's up, Prince?
Tax over the course of a year. The past Congress actually passed this legislation.
Awesome. Thank you so much, guys.
Thanks.
Thank you. Thank you.
Thank you.
All right, thank you, guys. I just want to add, many people ask what Bidenomics is, and this is it, right? This is a key part of Bidenomics when you think about the Inflation Reduction Act, when you think about investing in America, when you think about lowering costs, when you think about making a tax code fairer, when you think about creating union jobs, good paying jobs. This is part of this. And what we're seeing on the other side of Pennsylvania is congressional Republicans who are trying to repeal this, trying to repeal a piece of legislation that is historic and also the biggest, largest investment as we're thinking about climate change, as we're talking about. You heard from, clearly you've heard from the administrator.
Sorry, that was
twice
the
this week of FEMA,
mechanic for the Mercedes.
talking about what's going on in Hawaii and the extreme weather that many Americans are feeling across the country. And they want to repeal a piece of legislation that's actually going to make a difference and make sure we're doing clean energy, make sure that the manufacturing companies are coming back to this country and actually doing things like electric vehicles, charging stations, as you heard from the president when he was in Milwaukee, Wisconsin. And so that is what we are trying to communicate
G-Wagons are
through
cool.
all of you to the American people, and that's what we're
I like
going
them
to
too.
do. With
I
that,
had
I know
one.
that
Got
I
rid of
think
it.
there's a time limit at 2:05 for some of you all to leave to go to the East Room, and then the president's remarks starts at 2:15. But I'll take a couple of questions. Okay.
Just one.
Yeah.
On the Private King situation, North Korea, state media has issued this statement yesterday asserting why Private King has left. Broadly, is there any reaction to that?
Give me 1 second. Yeah, lower control arm.
Secondly, probably
Hey, what's up,
more
Prince?
importantly, what efforts have been made to contact the North Koreans? Has there been any success, either directly or indirectly? Has there been any attempts made since this statement has been put out?
So look, we do have a couple of things to say on this, which is, we would caution everyone to consider the source here. That is incredibly important. As we're hearing the report, we can't verify the comments that are being attributed to Private King, obviously. We remain focused on his safe return, as we have been saying for these past several weeks, and we are working through all available channels to achieve that outcome. None of it doesn't change anything. We want to make sure that he gets home safely, he returns to his family safely, and that's going to be our focus.
And has there been any progress in contact and assessing his well-being?
So I don't have anything else to share besides what the Department of Defense was able to confirm about a week or two ago. What I can say doesn't change anything. We want him to come home safely. We're going to make sure that we try to do this, work through all available channels to make that happen, and that is certainly our focus here. Okay.
One more in North Korea. Do you have any indication that they're planning a nuclear test surrounding the Camp David event?
I don't have any information on that or any indication to share with you at this time. No, gotcha.
On China, does the U.S. have independent data on China's economic growth?
So I don't have any new internal data or analysis to discuss or to share at this time, but we have all seen the reports of the economic weakness in China. That is something that we've seen from the experts, and there are private sector estimates of the PRC, the GDP growth, that are very low, as you all have reported on your own. And as we've said many times before, there have also been transparency issues, as we know, when it comes to the PRC and on the economic data specifically, and so I will leave it at that. I don't have anything new to share on any particular internal data. Go ahead.
Thank you. On Niger, any update on President Bazoum's condition? Does the White House fear that any trial by the military might be a pretext for his execution?
So we condemn the detention of President Bazoum, his family, and members of the government, as well as the unacceptable conditions under which they are being held. We always raise the importance of President Bazoum and his family's well-being and safety in both public and private communications, and we continue to urge for their immediate.
All right, boys and girls, it's almost action time. Let's see.
Hold the council for the safeguard
Let's see where you're gonna go. Feels like a sell. I'm seeing a lot of selling momentum right here.
Members of his government, and we'll continue to be consistent
Let's see.
on that.
1 minute.
You were also asking me about the trial, right? For
Chill. Hold on. Let me pull up the trading view.
In Niger, we are obviously shocked, and we are also opposed.
We're not necessarily going to take it directly at 2
that the CNSP
unless we see heavy momentum
beyond
coming to the market.
detaining President Bazoum and others.
Sometimes it takes
to
traders a
threaten,
while to
threaten
react.
Prosecutions.
159. Look at how small these candles are. We're going to do a market execution. So don't worry about inputting this. We're going to do a market execution. But I'm looking for volume. What I'm looking for is which way is volume going? See, that's not heavy volume. Sell. Short. Sell. Short. All right. So what we saw here was, you see how that 1 minute candle came in right at 2 o'clock? And let me see here. Struggling a bit. Came down to this area. Worked out. Go in. Yes. Sell. Market execution. Sell. Go right now. So I got in right above, like right around there. Okay. We have another green candle. All right, let me find a TP. Let's do this one here. Profit level. 1 second here, guys. Copy. TP. We got to be really careful around this area right here. There's heavy support, so everyone should be in profit in this area here. But I do think this thing's going to take a drop all the way down to at least this TP. Stop loss is stop level. Copy. All right. Create an alert at stop loss. We need to break this area. Let me check the heat map if it's turning red as well. You guys should check yours as well. Not that red. It's a little bit red, but not that red. Let me check the 4 hour. 4 hour looks neutral. Let me check the 1 hour. 1 hour looks neutral as well. Yes, we're still in. We really needed to break this area right here where they have strong support. Once this area is broken, it should head straight down to TP. So let me check the Forex Factory. 1 second, guys. Just statements. Trying to find the statements. One second, guys. Fed minutes. Officials saw high uncertainty around policy lags. I'm looking at the news right now. Give me 1 second, guys. I'm going to turn on the news real quick. Just give me a second, guys. You'll probably hear it on the screen. If you don't want to hear it, just click mute.
Going to have to be convinced of that by the data coming in. So they'll get another set time in September to do their forecast of the economy. I think they're going to revise down their forecast for inflation for this year. And then they'll get to the November meeting. And by that point, if our forecast is right, the trend in the data will just be so clear that they won't see a need to hike again.
And so it's sad to think that there's only 3 Fed meetings left this year, but we have a crowd meeting in Jackson Hole, if you want to count it that way. Are you expecting any revelations from Jerome Powell at Jackson Hole? Do you think he'll
The meeting is done. The meeting was yesterday, and
it is true that
this is just the minutes. They're just releasing the notes on what they spoke about.
Shell announcement, which really shifts the market's understanding of things. I do not think that this is one of those times. I think he is likely.
1 second. Let's hear this.
A bit on the hawkish side to keep the optionality open in case they need to hike more. I think he's going to reiterate this view that they could stay higher for longer, and that's the theme that we've heard from Fed officials, from other officials at central banks. But what I don't think he's going to do is give any sort of commitment to a near-term policy move. I just think we're at an inflection point. I don't see how he can have enough confidence right now that he knows what they're going to do next.
It's interesting. There was some great reporting by one of our competitors about how few people are actually going to attend this, and those who are attending Jackson Hole, meaning the Fed members, how few of them are going to actually speak publicly, or at least to the media, relative to what we saw in previous years. Does that sort of, I guess, color in this idea that there is maybe a little bit more uncertainty about where the Fed goes next?
I was hoping there would be more of a selling volume, like faster. You see how this candle went down super quick? I was hoping usually that's what happens. So let's see. Let's give traders some time to catch up. Looking for fast moving candles. Seems to be struggling to this area right here. As I always say, like right here, whenever you see the market during times of consolidation, whenever you're looking for a breakout, there's always going to be noise in this area. But once you break out of this area, we should be good to go. A boxer, it was a market execution. We didn't input the signal. Market execution means you just hit hit sell or hit buy, you know? So we hit sell around this area right here. So you could do a market execution now if you haven't gotten in, or you could wait till price gets to below this area, which was the signal earlier. You can still input the signal earlier and wait, or you could just hit a market execution sell right now. Yeah, I think it would. Well, not yet, because this thing is bouncing around on support here a little bit. I needed to break this area and start trading down here. Stop loss is, put it earlier. Sorry guys, my nephew's here, if you hear him. Ooh, that's a strong green candle there. Let's see. Going back to watch the news. Hold on a second, guys.
I think that's very consistent with that idea, and there has to be uncertainty. Anytime you're at an inflection point, you could be going in any number of directions. We've already heard of the couple of members that didn't want to hike.
Fed minutes, inflation risk could require further tightening, which is bad for the economy. I think overall the news was negative. Here's the live that I'm watching. I'm going to go ahead and paste it in here. You guys should be watching this as well. Come on, keep pushing, keep pushing. There we go. If it breaks below this area right here, then that will form a lower low, which confirms, and then it'll really be up game time once it passes this area right here. Let's not get too excited yet. We still needed to break this strong support, the strong support right here. Once it breaks this, though, those red candles that I'm talking about, those fast-moving red candles, that's when you'll see those. Maybe it might consolidate in this area a little bit. Should come back up to this area, wick out, and then another red candle. Let me go to the 1 hour RSI real quick. 1 hour time frame, I mean. Check out the RSI on there. Yeah, we're good. We should be good to go. As I always say, you see how the MA, which is this yellow line, is far apart from the RSI? That means there's strong selling potential, all right? I'm also going to put an alert on the RSI on the 1 hour at 30, 29, whatever. So directly at 30. And that may also be our TP. We have strong rejection, bouncing around. But once we pass this area, we should be good to go. Get rid of this line here. I would. No, not. I mean, you could. Let me see. Let me go back down to the 1 minute and see the chart patterns there. Well, let me go to the 15-minute first.
Abigail Doolittle.
Yeah, I'm liking it. You could if you want to. Right now, no, now I'm on the 15-minute. We have 46 seconds, 45 seconds left on the 15-minute candle. It would be good if this candle closed as a bullish engulfing candle on the 15-minute, meaning that the body of this candle, this red candle, is longer than this candle. That will tell us that we have some strong selling momentum in the market. But we really need to pass this area right here. Add an alert.
We are going to see, we are at session highs essentially at 425. So that would be consistent with the idea.
Look at that big bullish candle right there on volume. Keep pushing, break that thing.
At 1.5%. Right now it's closer to 1%.
Yeah, I'll be adding it. As soon as I make the videos, I'll be adding it, and I'll let you guys know, like, hey, I added this to the.
Could require further tightening, not cutting, but here we have, again, Romain, another divergence between markets.
Go down to the 1 minute, check out those candles there.
Nice look at the housing market, at the broader market, I should say. A look right now at the housing market on the back of learning the 30-year mortgage rates now averaging well above 7%. You pick your metric, and you're going to find it. New housing data released today, though, shows that the housing market right now a tale of two.
Yeah, the heat map is still neutral. So much consolidation. Here, this heat map here. I'll put it in the chat now. Yeah, this is a very strong area. But once we break out of that, should be smooth sailing to the downside. I'm going to turn the news back on for 1 second, guys. Report that out.
Your namesake, President Bostic of the Atlanta Fed has already said he thinks staying higher for longer instead of raising rates more. He said that publicly. So I think that kind of disagreement is there. It's going to grow. And that just means the ability to come out collectively and say anything definitive is just less.
For the record, he is the smarter of the Bostics, but I'm the better looking one. Just for the record, I am curious, Seth, about economic conditions in your view specifically. We know what the Fed is looking for here, but when we talk to market participants,
headed back towards entry.
There seems to be a much bigger, wider divergence, if you will, about whether we're headed for a recession, the timing of that recession, whether we have averted altogether and end up in that cushy sort of soft landing here. Are you still anticipating in the near term recessionary conditions?
So we are not.
I'm still holding.
Since we started this hiking cycle with the Fed, Morgan Stanley House view, my view, Ellen Zentner, our chief U.S. economist view, we have been saying all along that a recession is not the baseline view. The Fed had, from the beginning, had a strategy to let it take.
That's what strong green candle.
Get inflation back to target.
It's not looking good.
Let's get it down next year, no matter what it takes. We think the labor
you got stopped out.
A long way to go to get back to.
Should have been stopped out.
compared to what the level of GDP is, and so that's giving support to the economy. So we do not expect a recession in the near term. We don't have a recession in our forecast going out to the end of next year. Boy, that was not always a very popular opinion. You go back 6 months, 9 months, we had lots of people looking at us kind of sideways when they said, you don't think there's going to be a recession? When has the central bank raised interest rates this much without there being a recession? We said, well, wait and see, and here we are.
What gave you the confidence to say that you didn't expect one?
So it's a combination of the Fed strategy, right? If the main thing that was going to be slowing down the economy,
How are you guys stop losses getting hit?
causing the
My
recession, was going to be much
stop loss, I have an alert at the stop loss.
might
Hasn't
have a chance
gotten
to
hit.
avoid it if they want to. Necessary, but not at all sufficient. And then it really is the labor market. We saw in COVID,
Me as well, I'm still in.
employment dropped. Coming out of COVID, the economy bounced back a lot, but employment didn't bounce back anywhere nearly as much. We are still at a point where the economy is backfilling jobs that probably should have been hired a year ago. And it's that continued backfilling of jobs that sort of
Yes, we're still in.
job market data each month. And
If you can see my screen,
to have that kind of extra cushion.
okay, this is stop loss right here,
Well, let's
right?
actually talk about the wild
So like,
card here,
don't
which is
close out
China.
unless this alarm goes off.
Disappointing data out of China.
Shit.
If that slowdown that we're seeing on that side of the world
Right there.
is more significant than maybe expected, does that drag the U.S. lower as well?
So I think directionally it's got to be in that direction. China is a economy, but we also have to remember that the U.S. exports.
This is a strong support area, so I'm not even surprised at this.
Spillover from
Might take a while.
to the U.S. It's got to be there, but I don't think it's going to be material. And more importantly, we are looking for a slowdown in the economy. The Fed is trying to slow the economy down, so it's going in the direction that they want. I think the real question now is the calibration of that tightness. Can they stop raising rates now and just
We have resistance here.
keep things going down? I think they can, and so it goes in the direction of slowing things down, but I don't think it takes us over into recession.
Seth, great to have you here.
Very close to stop loss.
Seth Carpenter, Morgan Stanley's chief global economist, as we kick you off to the close. Coming up, a conversation with the CEO of Cava, the fast casual chain, forecasting higher profits for the year following its first earnings report since becoming
Come on.
Plus more
No, stop loss is about to get hit. Yeah, stop loss hit. Get out.
SJX beats on sales and boosts its full year
Close.
outlook. Shares hitting an all-time high.
And a deeper dive into the drama over at Goldman Sachs. More great reporting here on CEO David Solomon and the.
We may hop back in. Give it a second, guys.
To some of the moves that he's made. All that and more coming up in just a bit. Stick with us. This is Bloomberg.
This thing should be falling. There wasn't enough volume to the downside, but it will be falling today. So we got to recatch it on the way back down. Oof. Strong green candle. Let's see here. Take a look at the heat map again. Majority red on the heat map. I think the first move that we spoke about, the one where we would enter down here, would have been a safer bet. Second here. Hold on one second. I may say input the hold on 1 second. Input the original signal. I'll tell you soon. This one. Still bearish on this call. Yeah, can't win them all, guys. We're battling against the big boys here. But go ahead and input that signal there. I mean, you have to. You just, you have to take losses in this game. It's just, it is what it is. All right. Let me see. Stop loss. Entry TP stop loss. Input this signal, guys. There's some news here. U.S. stocks hold losses after minutes. Major U.S. stocks into mid-afternoon losses. Markets adjusted minutes from night's Fed. Document indicated that there was a broad consensus over the 25 basis points interest rate hike delivered following the meeting, although some. Let me just summarize it. All right, so main U.S. indices decline. Nasdaq down. Communication services weakest. Dollar edges higher. Gold and Bitcoin prices dip. U.S. 10-year Treasury yield rises to 4.25%. Wall Street dips after releasing of minutes from Fed's July monetary policy. Fed officials divided on need for additional tightening. S&P 500 companies Q2 calls dominated by themes: artificial intelligence, strong demand for travel. Atlanta Fed's GDP tracking estimate for Q3 rises to 5.8%. U.S. industrial production rises. Groundbreaking on the new U.S. European fiscal U.S. stocks mixed. U.S. stocks mixed ahead of Fed minutes. Consumer spending bounces in July as the index chart damage intensifies. Traders watching for next support level. Okay. Input this signal, guys. Should we also look for the market entry? No more sudden moves. Just, I know that if the market breaks this level here, okay, then it's going to go down to the TP1, okay, or the TP2 that we have here. So this is a safe area to know when this consolidation or this back and forth is done, and that's a good entry. So just wait for that. I'll put an alert there. If you want to do a market execution at that alert, you can, or you could input it. Entry. Needs strong bullish momentum. Let's see what volumes are in the 15-minute. Okay. We're at the 50 on the RSI in the 15-minute. Usually you should bounce off of this here and head back down like how it did over here. Go back down to the 1 minute and just wait. Just wait for entry on this signal here. .am. Everything on the news said the Fed minutes were negative. Yes, at least to you remember yesterday when we were looking for that signal, and then right at 3:30 the market just someone put in an order and the market just fell. That's pretty much what I'm looking for. I thought it would be right there at 2 o'clock already because, you know, we had that big bullish candle, but it wasn't. But we will get back in and we will be in profit as soon as this market falls. So we're just waiting for entry on that signal. Crims blew your count. Improper risk management, brother. You should never blow your count. All right, let me finish watching the news, what they're saying about the Fed. Just wait for this entry, guys. Give me a second.
Only on Bloomberg.
From the beating heart of global finance, economics, and politics, newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. How has this shaped your strategy for the bank? Is this new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question.
All right, just to reiterate, we're just waiting for this entry to get hit.
Every weekday at 9 a.m. only on Bloomberg.
Could take a while. Let's stop.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
All right, I'm going to mute myself for a second. But yeah, we're just waiting on the entry for that trade.
This is Bloomberg Markets to close, almost 2:30 here in New York. Keeping an eye on the broader market and commodities. A big downdraft that we're seeing in crude oil today. Abigail Doolittle standing by with our commodities close.
Yeah, it's sort of been a stealth sell-off here, Romaine, for crude oil. We all of a sudden, I've gotten used to seeing oil back above $80 a barrel WTI crude, and here we are back below 80 at 79.37, down about 2%. What makes it interesting is the fact that inventories this morning, they were reported, they're at the lowest level since January, so that would seem to be supportive of price, but not so much today. Maybe traders still worried about the weakness that we're hearing about out of China, the world's largest user of natural resources. Gold, I put on here just to see if there was a reaction to the Fed. No reaction, down 0.3%, which was basically the case ahead of the Fed minutes coming out. Wheat, on the other hand, we're seeing a little bit of a bid, and this after there was a Russian attack on a Ukrainian port on the Danube. So up 0.2%. Wheat has been down so much recently, so a bit of a change. And then finally, corn, it is up 1.3%. I'm not exactly sure what's behind that, but it is the best day in about 3 weeks for corn.
All right, nice wrap up there. What's going on in the commodity space? Let's turn to the restaurant space and talk about Cava. Coming off the highs, the share is slightly higher here on the day. This on the back of the fast casual Mediterranean chain. Strong first set of earnings since that IPO a couple of months ago. Of course, the stock has almost doubled since then here. And what I think investors saw in that report seemed to give them a lot of encouragement. Let's talk to the co-founder and CEO of Cava, Brent Schulman. He joins us right now here on Bloomberg Markets to close. Interesting earnings report here. And the numbers, I'm sure, matter to investors. But what I think mattered more to them, Brett, was this idea here of expansion, the idea of growth. Where is that growth going to come from?
Yeah, well, thanks for having me. We opened 16 net new restaurants in the quarter in 2 new states. So now we operate in 24 states across the country. So we've got plenty of growth in those existing markets, as well as the 24 plus states that we don't currently operate in. And we talked about entering the market of Chicago next year, our first foray into the upper Midwest.
Yeah, great.
So
city.
really excited to bring the Mediterranean into those communities.
Yeah, I'm not just saying that because I'm from there, but Chicago would certainly welcome you. I am curious, Brett, I know you have had to heard of these comparisons. Everybody says Cava is the next Chipotle, and that's meant, of course, as a compliment here. But when you look at who your competitors are, the types of customers that you want that maybe are shared with other restaurant chains, who do you see as your primary competition?
Well, we want to be the next Cava, and that is the category-defining brand of what we believe to be the next big cultural cuisine category, which is Mediterranean. And the great thing about our Mediterranean cuisine is it has an incredibly broad appeal, right? Whether you're a vegetarian eater, you want to eliminate lactose or gluten from your diet, or you just want spicy lamb meatballs and crazy fat, our food can appeal to a wide variety of consumers. And as our country gets more diverse, we're seeing the trends of consumers seeking bolder, more interesting flavors, as well as the trends of modern health and wellness, that people want to eat better. They're more informed about what they are eating, but they don't want to have to make sacrifices doing it. And that's where we come in with our unique cuisine where taste and health unite. And that's evidenced by our proven portability in over 24 states today.
And Brett, as you go ahead with these expansion plans, how worried are you about the macro backdrop, especially when you think about the labor market, how tight it is? How difficult is it to find workers and open new restaurants right now?
Yeah, we talked about our cautious outlook given the macroeconomic headwinds that are building around our guests. As far as the labor market, we've actually seen a deepening and widening of the labor pool. We're fully staffed, higher than 19 levels. You know, every restaurant has full staff complements, but those are above significantly our 2019 staffing levels as our AUVs have grown meaningfully. But when we look at the consumer side of it, we look at the recent spike in gas prices. We look at the cost pressures of inflationary utility bills related to extreme heat we've seen across the country, the student debt loan repayment waiting in the wings in the fall. And we saw in the recent Fed minutes a continued hawkish posture, really looking to temper growth to ensure that they tamp out inflation. We wanted to incorporate those headwinds into our outlook as we communicated yesterday.
Well, you're speaking our language with the Fed minutes drop there, but I want to bring you into a conversation that we were having with the Sweetgreen CEO actually a couple weeks ago about artificial intelligence and what role it might play in restaurants going forward. And I know that you have your expansion plans, probably not thinking about AI at this point, or if you are, what role do you think AI will play for restaurants and specifically for Cava?
Yeah, we look at technology to enhance the human experience, not necessarily to replace it. And so we think about how do we empower our team members to deliver that great Cava hospitality and make that amazing food where taste and health unite. So you can think about utilizing it to be more sophisticated and efficient, whether it's our inventory management and our inventory ordering, whether it's our labor schedule modeling, whether it's prep production and load balancing in the kitchen and cook production. So our team members, it really takes that complex thinking off their hands and does it for them to free them up to really engage with our guests and deliver that great Cava experience.
I am curious, as you expand, Brett, is there a sense here that when you do that expansion, that it's better to sort of cluster some of the new locations in the same market, in certain neighborhoods, or at least a certain geography within that market, or can you sort of spread it around and still make it cost effective?
Yeah, well, we learned that early on, Romain. We went, it was a little counterintuitive, our second market outside our home market of Washington, D.C., we went to Los Angeles. And what we learned, it was like starting a new business all over again. And so as we entered new markets, we've learned over time, we really like to enter with 3 to 5 restaurants over a 12-month period to not only create consumer awareness, but really have that supply chain critical economies of scale, as well as operational integrity and economies of scale from an operations standpoint. So when we go and enter these markets, we want to do a cluster of restaurants. Now, where we locate those restaurants, I think we have a lot of optionality because we compete both urban and suburban. We see success across a wide variety of trade areas. So it allows us to enter these markets in unique ways across a variety of neighborhoods.
And just to be clear, so all of the Zoe's stores, restaurants that you acquired, have they all been converted to the Cava brand?
So we no longer operate any Zoe's Kitchen restaurants.
Okay.
We have converted all but one. One remains open and will open in the next few weeks as a Cava.
Okay.
All right, Brett, got to leave it there. Really appreciate your time today. That is Brett Schulman. He is the CEO of Cava. Thank you. Still ahead on the close, cash-strapped consumers are leaving room in their budgets for TJX. We'll talk with Adrian Yee of Barclays about the second quarter results for the parent company of Marshalls and Home Goods. That's next.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports. On the next episode of The Circuit.
What motivates me is I want to use this technology to truly do what I think at least all of us are in tech for, which is democratizing access to it.
There are major downsides we have to manage to be able to get the upsides.
Watch The Circuit with Emily Chang, Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
From New York City.
From London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Well, we do have some breaking news. This from an interview with Argentinian presidential candidate Javier Milei. Just running through some of the headlines here. He says the dollarization plan among the first measures to Congress, and that if elected as Argentina's president, he would shut the central bank. Again, this in an interview. We're going to bring you more of this interview as it happens, but just running through some of the headlines here. Again, he would shut the central bank if elected as Argentina's president, would seek exit and refuse to work from China. And again, the dollarization plan would be among the first measures to Congress, and that he would make every effort to avoid default. Romain.
All right, a bold call there by the presidential candidate over there in Argentina. Meanwhile, back here in the U.S., let's get to our top calls of the day here. And we're going to start off with Chevron, upgraded to buy from neutral. This over at Mizuho, making adjustments to its stance on U.S. oil stocks. Despite higher prices, the analysts saying there are some secular tailwinds for the sector that allow for more confidence in longer-term cash generation. Chevron up fractionally on the day. Next, Keurig Dr. Pepper getting raised to buy from neutral over at UBS, thanks in large part to high expectations from coffee. The analyst says it's pretty confident there that the earnings inflection is beginning, and that's largely due to improved margins from the company's coffee segment in the U.S. Shares up about 1%. And finally, let's take a look at, well, TJX, the retail company behind TJ Maxx, Marshalls, Home Goods, all your favorites. Barclays reiterating an overweight rating on the company after the second quarter report that dropped earlier today. Adrian Yee hailing the off-price model as an accelerant of strength, especially given TJX's exposure to higher income shoppers when compared to rivals like Ross and Burlington. Shares of TJX up 4%, $89.49. That's going to be a record high should it close at that level. Those are our top calls, and we're going to stick with that last call on TJX because it is a big mover on the day. Adrian Yee is joining us right now. She is the U.S. Retail Senior Analyst over at Barclays. And let's just start off here with the secret sauce to TJ Maxx. It seems like when the economy is doing well, the stock does well. When the economy is doing bad, the stock also does well. What's going on?
Consumers love value.
right? You like stretching your dollar, and you like paying less for something that you believe, the quality is worth more. So that's the secret sauce here. The other piece of it is that off-price is the model itself. It allows these retailers to actually know what people want. So whereas most retailers are buying and guessing 6 to 9 months out, they're placing bets sort of 3 months out, and then they're filling in the next 3 months with known winners. So it's a tremendously strong model, and the supply chain is actually allowing them to have that strength.
There's been a lot of discussion, particularly about kind of the lack of an online presence, or at least not to the extent that you see from other retailers. That's that whole omni-channel experience that other retailers like to boast as well here. This is kind of one of those places, whether you're going to Home Goods or TJX or Marshalls or whatever, where you kind of have to show up, look around, rummage around. That's not for me. My wife goes to this place, I feel like every other day, and she comes home with something. She loves it here. Is there any sense that they would ever, I guess, tweak that model for modern times?
So with off-price, now remember, so they have about 2% of their sales, very, very, very small, right, compared to 30, 40, 50% of the traditional kind of brick and mortar omni retailer sales. The reason that the off-pricers do not do this is because it's kind of cost prohibitive. It's not very profitable. For the typical retailer, while they get hit on the product margin, right, because they have extra shipping, it's really accretive to their overall EBIT margin. That's not the case with off-price. So number one, you want that footfall. You want your wife going in for the treasure hunt, so to speak. They buy things very broad and very shallow. So there's no depth behind it. So if it's stocked out online, there might have been a few of them, per store. So those are a couple of the reasons why it doesn't make sense. And you want people in those stores seeing things that they didn't come in for, right? That impulse buying, and then leaving with handfuls, right, of product.
Well, Adrienne, speaking of leaving with handfuls, it feels like last earnings season we heard a lot about shrink. We heard a lot about theft. Hearing a little bit less of it this earnings season. Maybe that's my own bias. What do you make of that?
I love I love the characterization of that. So what's happening is shrink is not good. It's not a good guy. It's not a bad guy. So with retailers, what they do typically, they do a physical count of inventory either twice a year or once a year. TJ does it once a year at the end of the year. That's how they found out they had so much shrink and loss and theft last year. So what's happening now is you're not going to find out whether you're right or wrong. You're clearly monitoring things better. You're tethering your leather goods, right? And you're kind of locking up some of the jewelry and the perfumes, et cetera. But you won't really know until the end of the year. What I will say is generally shrink across the kind of the retail universe, whoever had it, it's not getting better. But it's certainly not getting worse, and they are monitoring it, and they've hired kind of store payroll hours to watch the sectors that are kind of more susceptible to that shrink and theft.
Well, it will be fascinating to see those year-end numbers. Unfortunately, we have to leave it there. Adrienne, hope to have you back soon. That is Adrienne Yee over at Barclays. From New York, this is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Markets to Close. It's time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Weston, joining us as he does every day at this time. David, a lot of great interviews that are featured on Wall Street Week, and I'm told that you had a chance to sit down with a couple of folks to talk about AI today.
Yeah, back to AI, but from a slightly different direction. We have two people who wrote an article that's out today, actually, in Foreign Affairs, talking about the geopolitics of it. What it's going to have to do to the way we regulate and the way we structure this around the world. It's written by Ian Bremmer. He's a Eurasian Group president, and Mustafa Suleiman, Inflection AI co-founder. He's also the author of The Coming Wave, Technology Power in the 21st Century's Greatest Dilemma. That's coming out just in a week or two. And we talked to them, started talking about how big and how fast is this coming and what do the governments have to do about it.
This is going to be the most important transformation of our lifetimes. I mean, think about it. Everything that has made us productive as a species is our intelligence. You know, everything around us is created because we have the ability to simulate, to plan, to imagine. And now we're teaching machines to do the same thing. We have generative AI, we have many other machine learning tools now, which are getting better and better at producing great value in the world. And I think that is going to be the biggest turbo boost to productivity and invention and creation that we've seen in the history of our species. This next couple decades are exactly the productivity boost that we need.
Ian, we've seen technological waves in the past. I mean, perhaps one of the things we think about is the internet, which changed an awful lot of the way we conduct our lives, also changed the way governments react with one another, corporations do. Is this the same sort of change, or is this of a different kind?
Well, it's similar in the sense that the internet, in the virtual world, the digital world, technology companies are dominant. They're functionally sovereign in deciding how the internet functions, who gets to see what, how you interact, do you have a platform, do you not? But with artificial intelligence, the influence and power that the digital world has over our lives, in how we think, in what we're capable of doing as individuals, as corporations, as governments, in our national security, in our economic productivity, is increasingly being driven by these same technology companies. So it's one thing to say the technology companies have control of something that's kind of marginal. It's another to say that they have control over something that is fundamental to how we think about power in the world. And if you want to regulate it and govern it, as Mustafa and I are saying is utterly essential and yesterday, that means that you're going to have to work together with the technology companies in creating these institutions and architecture. And that is something we've never seen before.
Yeah, and I want to talk about the proposals you and Mustafa have in Foreign Affairs. But Ian, I'm curious about, as we go into this, are the incumbents likely to prevail, at least in the initial phases? I mean that both in the private sector in terms of the really big tech companies, but also some of the countries that have rather than have not.
I think we don't know. I mean, the fact is that right now there are only a very small number of companies in two countries that are dominant players in AI. My co-author and friend Mustafa, one of them in that White House meeting with Biden just a couple of weeks ago, there were only 7 represented. But this technology is expanding far faster than Moore's Law. It's 10x every generation, as opposed to, in a year, as opposed to 2x every two years. for semiconductor speed, for example, and reduction of price, and the proliferation of the influence of those models, not just in terms of what companies build them, but what individuals and organizations, some for good, some for nefarious purposes, will be able to drive this AI revolution within a matter of a very few years. We're talking not about 10 actors or 100, we're talking about hundreds of thousands.
Mustafa, the challenges for governance are just enormous, as you lay out with Ian in this foreign affairs piece just today. But it strikes me that any one government has a challenge in trying to catch up with technological change. We've seen that again and again and again. We're looking at something that needs to be, I think, global, given its nature. What are the basic approaches that should be taken, understanding that none of us, I don't think, perhaps not even you, knows actually where it's going to end up?
Look, I think technologies are always very difficult to predict. By their very nature, they have emergent properties. When they interact with the world and they are actually used and they're then adapted, they change form and change shape, and they're doing that very, very quickly. So the challenge is really significant, but I think there are lessons that we can draw from existing processes. So, for example, the Intergovernmental Panel on Climate Change has been incredibly effective at bringing together a very, very diverse group of scientists, civil society groups, academics, and of course governments, to actually establish the scientific fact base for what is happening over a multi-decade period. And I think that we need something kind of similar for artificial intelligence. Think of it as an international panel on AI, and its primary job would be to be an independent, science-based, accurate assessment of the pace of change, the strengths and weaknesses of these models, their constituent inputs, so the data that is used to train them, the chips that are used, that they train on. And that would, I think, help people to get some confidence that there is an independent expert body that is at least tracking progress.
And finally, Ian, there's the multipolar issue that you lay out in your piece. There's also a bipolar issue, which, as I understand it, one of the things you're suggesting is we have to start with the United States and China, right where we are, because they're in many ways the two leaders on it. What are the hopes and dreams that you have for the United States and China to come to anything approaching a framework jointly to address AI?
Well, this is a question that the Bloomberg audience is going to particularly resonate with, because AI is not like an arms race between the United States and the Soviet Union, now the US and China. It's much more like a structural aspect of our global order that must be harnessed and can't be allowed to destroy everything we've built. In that regard, it's much more like the financial markets. And Mustafa and I suggest a techno-prudential approach to regulation, like the macro-prudential approach we have in the marketplace. Think of the Financial Stability Board, the IMF, the Bank of International Settlements. These are all organizations that the Americans, the Europeans, the Japanese, and the Chinese are a part of. And they are, the reason they join is because they all want to identify and mitigate risks to global stability in the financial markets.
Choking off innovation. Those are the authors of AI Policy Paradise. Out today, I'm here with Ian Bremmer, the Electric Group President, and Mustafa Too, Inflection AI co-author. I thank Fair today in Western here as we head into the final hour of trading share on Bloomberg markets to close higher on Treasury yield, lower on U.S. equity prices right now, and markets having to digest more concerns about China.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Geez, that Matt Miller, like, throwing, just walking in our studio, taking over. He was just talking with us guys about a story that's coming up a little bit later on.
He's got a lot of thoughts, and maybe we'll have him call in.
I said he really studied really well when he had this guest on air.
He did, yeah.
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 He was really the journalist.
We got her on the show later.
We're going to talk specifically about the high-potency pot market worth billions that's drawing regulatory scrutiny.
That's the most important story on Matt Miller's mind.
Good afternoon, everybody. It is Wednesday. It's not Elon's world that we're all living in and paying rent. It's Matt Miller's world, and we're all paying rent. This is Bloomberg Business Week, live in our Interactive Broker studio on YouTube and Bloomberg Originals. Carol Masser, along with Tim Stenivek. And it is Wednesday, but where is everybody? Low volume. We had Fed minutes. We've got lots of news out of China. It continues to come out. We're going to cover that. That really is a focus for us.
Yeah, we're going to have several voices on China, including the team over at the China Beige Book. They've created their own private network for tracking the Chinese economy. So do they think China is a, quote, ticking time bomb?
Yeah, listen, this is what President Biden said. So we're going to see what everybody has to say about that. We've also got, really... I feel like a duo of people who have seen the cycles out of China for a long time. So I'm just curious to see what their assessment is. Having said that, we're also going to get into the most read on the Bloomberg about Goldman CEO, most loyal deputy being tested by mutinous partners. Dun, dun, dun. It's like Game of Thrones, the Goldman version.
Yeah, the most read story on the Bloomberg today, as you mentioned, Carol. We're also going to talk retail on the heels of TJX and Target reporting today. We also got Walmart later this week.
I got to say, when I go shopping, TJ Maxx, it's like my go-to. Home goods, too.
I feel like I hear that from you quarterly.
It's kind of, who needs therapy? I've got that. All right, we're going to get into that. We've also got, did you talk about the two Nassau counties?
Not today.
We've got the tale of two Nassau counties.
I didn't even know there was a Nassau County in Florida.
I know.
Did you? Oh,
sorry.
Carol's going to get some water. Long Island and Florida tell two very different stories. Ben Steverman is going to join us a little later today. It's in the upcoming issue of Bloomberg Business Week.
Okay, sorry. That's what happens when you inhale your peanuts just before coming in on air. And then, of course, we've got a lot on the markets because there's a lot going on. It's kind of, as we said, a quiet volume day, but a lot of news that continues to come at investors, Tim.
Yeah, I wonder if it's not quiet in China.
No, I'm sure it's not. And I bet I'm waiting for what the next 24 hours brings. In the meantime, we are going to head over to our TV colleagues, talk about the trade, because we do have equities bouncing around their lows again. And we're watching that yield trade. We've got some economic news in those Fed minutes. But right now, over to Katie and Romaine, because we've got Countdown to the Close starting right now.
Comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Romaine Bostick alongside Katie Greifeld, joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms on another down day for U.S. equities, another up day when it comes to Treasury yields, Carol Masser, and of course another day where we continue to obsess about what's going on over in China.
Yeah, and that's it, right? We have this obsession because it feels like in every 24-hour news cycle there is a flurry of headlines, just like we saw in the last day or so. And you've got one of China's biggest shadow banks. They're skipping payments on investment products, kind of not with a strategy about kind of what happens next. You've got some another batch of disappointing economic news, and you've got Fitch talking about maybe a possible downgrade. I know they talked to Bloomberg
Fitch,
Television earlier. Fitch.
Yeah, they've really been downgrading a lot.
They're on a roll.
Yeah. It's like they all just came back from vacation and decided, hey, the world is burning. Maybe we should do something.
Calendar turned to August. It was time to go.
Well, the big question that we have is to what extent are these problems contained in China, and to what extent, Romaine, do they actually get worse? We're really spending a lot of our program today asking those questions. We got some great guests this afternoon. Dexter Tiff Roberts, he wrote The Myth of Chinese Capitalism. He's going to be joining us. And then Shahad Kazi, who's got the China Beige Book. So interesting
to look at some of the price action in whether it's Chinese stocks over there or the ADRs that trade here in the U.S. Because you remember we had that big sell-off earlier this year when the sort of reopening boom that everyone thought we were getting didn't sort of materialize. And then everyone decided, okay, well, things got oversold. Let's start to buy back in. And now you have this slew of economic data that shows that maybe there was reason for that sell-off to begin with.
And it's going to be really interesting to see how China responds. Of course, we know they've been responding on the monetary front. Whether we do get fiscal stimulus, of course, it's been reported that they don't want to do that, but we'll see if the data forces
You know
their
what might
hand.
help them, Katie?
What's
if
that?
they just brought everybody back to the office.
You know, what a perfect segue.
Nicely done.
There was a really interesting New York Fed survey out on the topic of work from home. Interesting numbers here. This survey found that 25% of business leaders have changed their policies over the past year to require more in-person work. 17% plan to do that. Overall, these service firms, they would prefer that 3/4 of their workers be back fully on site. But the survey also found that only about 68% of employees actually work in person all the time. But even 68% really surprised me. That seems very high for fully in the office.
Yeah, but then like some of the data that they had in that same survey, particularly when it comes to service firms and the benefits of work from home, I mean, they make it clear that, you know, having that flexibility is huge for employee retention. It's huge for recruiting employees, but none of them actually seem to think that it was good for building a workplace culture.
Well, and if you think about like a country where people have not been moving around for decades, that finally not hybrid, but working from home gives an individual an ability to work in one state and maybe work many states, at a company based many states away. So I don't know. I'm not quite sure how this all ultimately trickles out.
I mean, it's pretty simple. Employees like working from home. Employers don't like when they do that, Katie.
Is Carol wearing polka dots today?
There's the tension.
What is that?
I love it.
Yeah.
I saw her in the pantry. It's a really pretty dress.
Yeah, it's like Kwame.
Anyway, I also in this survey did think it was interesting, moving swiftly along, sort of how bifurcated the labor force could become if hybrid really does pick up, and that is the future, because this survey obviously found that at manufacturing firms, 94% of employees work in person. So of course we have these conversations about hybrid workplaces, and
94% of people in broadcast work in their
that
offices.
too, manufacturing workers and broadcast people were in the office. So.
I just want to know, is that the good-looking Bostic, or is that the smart Bostic that's next to you?
Both.
Just remember, it's a digital world. We catch it all. All right, guys, we're going to continue this conversation, counting you down to the close on this Wednesday. Our cross-platform on radio and TV, on YouTube and Bloomberg Originals with the good-looking Bostic. It's coming back at 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, it is a wacky world, and we're all just living in it. Between the economic data points, trying to keep track of all the news out of China, and then, of course, about 67 minutes ago, we got the latest minutes from the last Fed meeting, Tim. And key takeaway, Fed officials at that meeting largely remained concerned that inflation would fail to recede and suggested they may continue raising interest rates.
Are you surprised?
No.
Okay, just wondering.
No. I think this is, unfortunately, the Fed is going to be very careful about not backing off too early, because the crime would be, the economic crime, the environment crime would be that all of a sudden inflation continues to rear its ugly head. At the same time, I would continue to argue that 2%, I think many, is not a realistic rate that we get back down to.
Okay, well, let's put it to the panel, because we got a great group joining us this afternoon.
experts.
Stuart Paul is U.S. economist for Bloomberg Economics to give us today's market reaction to all this. We also got Bloomberg News Markets reporter Abigail Doolittle. They're both right here in our Bloomberg Interactive Broker studio. Stuart, I want to start with you. And were you surprised at all by the minutes that came out a little over an hour ago?
What's interesting about the minutes is that the Fed maintains an optimistic approach, that it can maintain some sort of a soft landing, but it's not really fully willing to commit to hiking rates further given that optimism, right? So it's maintaining a sort of optimistic outlook about the economy, but it doesn't fully translate into policy space one for one.
Okay.
I would agree from the standpoint that they're talking about more hikes. They're saying that inflation risk, they still are seeing significant inflation risk. Only 2 members at the July meeting called for a pause at that time. What really continues to stand out to me, though, is the disconnect not just between what the Fed's color is in their policy action, but the markets in the Fed. Because if I go into WIRP right now, WIRP next year is calling for 1% in cuts. And yet here you have the Fed talking about they think they may have to hike more. Fed Chair Jay Powell a couple meetings ago was talking about the idea that cuts are years away. So there's this real disconnect on all levels around Fed policy.
Well, and what I wonder is, how do you guys think about, and let me go back to you, Stuart, is that the idea that, okay, could, as soon as the Fed say it's safe, be pretty aggressive in cutting rates? That to me would say the economy's falling undone.
Yeah, I agree with you. Well, I'll let.
No, go. No.
Stage. All right. How about now? Okay. All right. Cool. Okay. Cool. Sorry. All right. What I was saying is, I'm probably only going to be in this trade until 3:30, depending on what this 3:30 candle looks like. I would like price to break this support area right here to confirm my push to the TP. Hopefully at 3:30 we get some strong blue red candles. If you're in profit and if you want to close out, you can. As I always say, you don't have to wait for my TP. I'm personally going to wait a little bit longer, but we do have a possible reversal right here. But I'm going to wait until where this red line is. That's 3:30. I'm going to wait till 3:30 to see, and then just close out. Yes, you're too late. Because between 3:30 and 4, that's when most the market's about to close, and usually there's a sell-off. That's my 3:30 to 4 p.m. Scalping strategy. Usually I notice in the market around 3:30 p.m. when most traders are getting ready to leave the office or the desk or whatever. The market has a sell-off because people are taking profits and so on and so forth, and the market just takes a dump. Looks like it's holding this area. If you don't have like a big account or if you're in profit and you want to close out, feel free to. Don't have FOMO. I do think it'll go down at 3:30, but if it goes past this area right here, I'll probably close out with my profits right here. Where this alert is right there. If it goes, price goes above this area, I'll probably just close out. Or yeah, you could do that as well. You could take partial profits. Two minutes till. All right. Yeah, let's see if that break happens at 3:30. If it starts pushing at 3:30 up, I'm probably going to close out. Let's see. 1 minute till then. Let's see here. We have how many? 38 seconds left on this candle till 3:30. I got my finger on the trigger. If I see a sharp move to the upside, I'm going to close out. What I want to see is red candle. Next one, red candle, 24 seconds. I would like to see a strong red candle here to the downside, breaking this area. But if I see it going up at 3:30, I'm going to close out. Five, four, three, two, uno. See? Started off in the red. Good sign. See? Support might be too strong. It's too late to hop in this trade. Let me remove this red line here so that we could see it a little bit better. We're looking for a break of this area. Looks like we are, let's see. Keep your finger on the trigger. Looks like it's going to break. Still needed to close. 2 seconds. Wow. Strong. Come on. Strong area there. You can close trades at 3:30. Yeah. News. What we got? Weekly commercial crew numbers fell more than expected. I'm going to hop out. Well, I'm going to hop out partially. A lot of consolidation. No problem. You said after? Is it? A lot of consolidation. Pressing currently eating. Yeah, you guys should be out. Outie. But watch this though. Just keep watching this trade. I gotta head out, but keep watching this trade. I think it's gonna fall some more and probably gonna end up hitting the TP. But that's it for today. We'll be back tomorrow at 9 a.m. 9 a.m. tomorrow. We'll be back to do it all over again. I have to check what news comes out tomorrow. We'll probably take 1 or 2 trades and keep the profits going up. All right, guys. So tomorrow, 9 a.m. I'll see you then. Eastern Standard Time.